Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. Now, first, let's talk a little bit about the volatility we experienced on Monday that seemed to reverse course just as quickly on Tuesday. But despite that, if you look underneath the surface in point number two, I want to talk about the average stock, despite the indexes performing very well, is actually down about 10%. So, some pretty significant weakness underneath the surface that is a bit concerning. And finally, pretty calm 2021. We're here talking about volatility in terms of 2, 3 percentage points. If you look back historically, we typically average about 3, 5% pullbacks during the year. We've yet to have one so far, and we're coming up on a time of year that's usually pretty bad. Now, if you look at US equities, S&P 500 on the chart here, a couple of points here. 1.6% drop on Monday. That is the first or largest drop since early May, and only the fifth daily decline of more than 1.5% since the start of this year. One of the things we can see here is the trend's been pretty steady off that March 2020 low defined by the 50-day moving average, which from a price perspective, it's continued to hold here this week. Now, underneath the surface, I talked about this on the chart here. We have the average stocks performance of each respective sector with the Russell 1000 right there in the middle. And this is the percentage decline from each average stock's 3-month high. All right. So, how much have they pulled back here recently? Well, pretty significantly, especially if you look at the average stock in the Russell 1000 of more than 11% as of Monday. And some areas, specifically in some of those cyclical areas of the market that led off of the early months of the post pandemic bear market, financials, materials, energy, those cyclical areas, those have pulled back dramatically. Financials obviously are part of that financial, of that interest rate story that is kind of drifting lower here. But the overall theme here is that when we've looked under the surface, this has been developing for the past couple of months. If you look at percentage of stocks above their 50-day moving average, another way to measure market breadth, it's just about half. So only half of stocks are in uptrends right now. This is not the strongest, most broad market breadth trend that we have right now, but right now it is continuing to trend higher, but there is a bit of weakness underneath the surface. And finally, I talked about that rare lack of volatility that we've had in 2021. We have yet to have a 5% pullback in this calendar year. That's pretty significant. If you look back to 1950, on average, the S&P 500 averages 3 separate 5% pullbacks. All right, so what's that tell us? Number one, we're not necessarily quote unquote due for a 5% pullback, but if you look back historically and look at probabilities, hey, we've got to accept that we've actually had a pretty unique run with this lack of volatility. And at some point, we're probably going to see the type of pullbacks that we historically see, which are about 3, 5% pullbacks a year. If you look in terms of a little bit broader 10% pullback, on average, those occur about one time per year throughout history of the stock market. And if we're talking about seasonality and kind of what we see in history, another kind of warning sign here. Take it for what it's worth, but if you look back from a seasonality perspective of all the 12 calendar months, August and September, the months we're getting ready to go into, have historically been the weakest. Now, of course, mathematically, one of these months has to be the weakest, but we typically see August and September a little weak before we get into that October and November period of outperformance. Something to keep in mind as we enter the second half of this year. And finally, before we wrap it up here, interesting story out of Malaysia. Authorities actually confiscated more than 1,000 Bitcoin mining rigs, gathered them in a parking lot, and proceeded to destroy them with a steamroller. Now, why would they do this? Well, the owners of these mining rigs were accused of allegedly siphoning and stealing more than $2 million of electricity to mine Bitcoin. Remember how much electricity and natural resources it takes to mine these Bitcoins. So as a punishment, they destroyed these. Apparently, in the process of stealing that electricity, 3 different homes were burnt down as well. So little cautionary tale for anybody out there. that is mining Bitcoins, especially if you're going to think about stealing electricity in Malaysia. Something to keep in mind that the steamrollers are out there. Government intervention is always a possibility. So stay safe, and I want to thank everyone for watching, and we'll see you next time.